A few weeks ago, SpaceX, Elon Musk's rocket, satellite, social media, and AI company, debuted its stock on the public market. It was the biggest IPO, or initial public offering, in history, and it made Musk the world's first trillionaire. It was one of those stories so big that it broke out of the tech news bubble. I had group chats and in-person conversations with friends wondering if they should try to buy SpaceX stock when it went public. And Axios senior AI reporter Madison Mills was having those same conversations too. She wrote a story about whether it's a smart financial decision to try to invest in a massive IPO like SpaceX. This is an important conversation right now because SpaceX isn't the only major AI-related IPO expected for this year. OpenAI and Anthropic also filed IPO papers in June. Now, we don't know for sure when either company will go public, and they could always decide to wait for a later time. But when they do, everyday investors will, for the first time, be able to get in on some of the most talked about AI startups in the game. So, should you be investing in these companies as soon as they IPO? What are the risks here? Madison joined me not to give you personalized investing advice, but to discuss what she heard from the experts. This is Terms of Service. I'm CNN tech reporter Claire Duffy. My conversation with Madison after this short break. Madison Mills, thanks for doing this.
Yeah, thanks for having me.
So just a level set here for people who are not familiar. What is an IPO, an initial public offering?
An IPO is like the debutante ball of a company, like the coming out party for a company. It's when they've gone from being private, they've had a smaller pool of investors, venture capitalists, smaller groups of very wealthy individuals, and now they're coming out to the public market and everyday investors can have a piece at the pie and get the chance to invest as well.
And why does a company want to IPO? Why is that such an important moment?
It's a big decision because there are a lot of pros and cons. The biggest negative is that you have to have quarterly earnings. You have to answer to shareholders. Like if you're a big growth stage part of your company, you may not be ready to deal with all of that stress. But if you are seeking a lot of capital, it can be a great way to get a ton of cash, which is obviously what we just saw with the SpaceX IPO. The stock skyrocketing. It was up 20% seconds after the company officially listed. And that kind of access to capital is something that businesses can use to reinvest in themselves. And in this AI race that, as you know so well in your own reporting, is so expensive, it's a way to get access to cash, especially as a lot of these companies have tapped into the private pools of investors for years. And so it's time to kind of broaden out their ask to other investors.
How does an IPO work? Who gets to buy shares and when?
Yeah, I feel like this is one of the more misunderstood parts of an IPO, at least for the everyday investor, because there's this idea that once a company goes public, everybody's getting this equal shot, but that's not necessarily the case, right? You have the company going to various banks and asking them to underwrite the IPO. So then those firms, whether it's Morgan Stanley, Goldman Sachs, JP Morgan, they would kind of handle the financing and like the logistics of dealing with the IPO. It takes about 4 months to actually go through the entire process of filing paperwork to the SEC, going out to hedge funds, pension funds, and saying, hey, how many shares would you guys want on this? And then that underwriter ultimately works with those different groups of potential investors to come to what they see as a fair price.
So I think that is a really important piece for people to understand. When the IPO happens, it's not necessarily that everybody can buy shares. You have those select groups who the underwriters have gone to specifically who get to buy shares at the IPO price, and then it debuts on the public market, and then the public can buy it at often a different and higher price, right? Is that the right outline?
Yes. We are seeing increasingly that the likes of Robinhood, Public, not Schwab in this case, these kind of retail investor shops are getting some access to shares in advance, but it's very small. And then even when they get that access, they're only giving shares to kind of their top traders who they know are very, very engaged and they know will be willing to spend a lot of money on these shares in advance. So it's not the full public availability until the next day, typically.
So with the SpaceX IPO, that small pool of IPO investors got to invest at $135 per share. The stock then listed the next day for anyone to buy on the public market, starting at $150 per share. Once a stock lists publicly, the market, aka all the investors buying or selling a stock, then determines its value.
Seconds after it officially is open to the public, listed on the NASDAQ, and everyone can get in, the stock immediately started skyrocketing. We have seen examples in history of the opposite happening, but that's why, to your point, it's important to kind of point out that you're not necessarily the everyday person isn't able to just immediately get access to the best possible price, because it's like a nanosecond of time that the public market gets that access.
And if I'm an everyday investor and I want to buy shares in an IPO, how do I do that? Is it just like buying a share of any other company?
Yeah, you would be able to do it on, your brokerage account, or if you have a Robinhood account, you could do it that way. Whatever way that you're typically investing, you would be able to once the company is public and listed on an exchange, whether it's the NASDAQ or the NYSE.
And the big AI companies that we're talking about that are IPOing here, OpenAI and Anthropic, potentially in the next couple of weeks, SpaceX, just a few weeks ago, are what's known as mega cap IPOs. What does that mean?
They're just massive, right? SpaceX became the 5th largest company in the U.S. just days after IPOing, and then it ended up surpassing Amazon, which is just crazy, right? Like Amazon has been around for decades, and SpaceX is a much newer company, and one where we have not had even a single quarter of public earnings to be able to have, analysts rate this company or be able to just do the basic kind of fundamental stock analysis to see what the health and profitability of the company is. And yet it's still in that top 10 list of biggest American companies is a huge boon for them, obviously. So mega cap is just sort of a label for those huge businesses.
And it's interesting that we're seeing all of these 3 big AI companies, OpenAI, Anthropic, SpaceX, all IPO within the same year, potentially within a couple of months of each other. Why is that happening?
Yeah, so it's a couple of different reasons. One is that they are all competing for the same pool of capital. Money is not unlimited, obviously. And so you don't necessarily want your biggest competitor going to market first, getting and attracting a ton of capital that then you won't have as much access to. Now, obviously, there's a lot of money in the world and a lot of people who want to be invested in these AI names. So most of my sources say that's not going to be too big of an issue. So then the other piece of it is just that, as you mentioned, the AI build out is so capital intensive. This is just a ton of money that these companies have to spend to get data centers off the ground, to buy chips to go inside those data centers. And so they're starting to have to consider turning to the public market for the type of cash that they need to fund that level of a build out.
We talked about the sort of race that in some ways these AI companies are in to IPO to make sure that they get access to this capital and these investors. But the one outlier potentially is OpenAI. We've heard Sam Altman say that he's less worried about the timing. He's less worried about the race in all of this. And literally, as we are sitting here, we got a New York Times alert that said OpenAI is now considering waiting until next year rather than IPOing along with Anthropic and SpaceX this year. Why would that be?
Yeah, I think that Sam is an incredible marketer and is very attractive to private investors. He has no problem getting capital on his own. So I could see that being a factor in their decision. They also may not want to have to deal with the public scrutiny of showing how much money they're spending on compute capacity, showing how much they're spending on their own data center ambitions. And so staying private longer gives them a little bit more of that opacity for longer so that they can kind of do what they feel they need to do to keep growing. And maybe part of it is the feeling that if SpaceX and Anthropic are IPOing this year, they want a beat to be able to catch investors at a later time. But I'm very eager to hear more about that reporting and figure out what exactly might be driving that delay.
Lots of people are talking about these AI IPOs and speculating on when they'll happen. And the question is, should you invest in them on day one?
The overwhelming advice that I got from the experts was to avoid buying into the IPO.
Why? And that's for SpaceX, but also these other mega caps, OpenAI, Anthropic. Why?
Because of the lack of clarity around the health of these businesses. Everyone I talked to overwhelmingly said, if you must, please wait a year. Give yourself at least a couple quarters to hear from these companies, to be able to see whether they are able to turn a profit, what their revenue growth looks like, what their operating expenses look like, given how much money they're having to spend to keep up in the AI race. Just those like pesky accounting things that come into investing, and making sure that you give yourself the opportunity to do that due diligence before you buy into them. And then also, if you look at the stats historically, IPOs do tend to underperform. We think about the big winners, the Amazons of the world, but those are few and far between. And more often than not, IPOs are underperforming the S&P 500 a year later. So you don't want to encourage people to invest in these companies and then they come back to you in a year and say, I should have been in the S&P 500. So looking at that historic data is helpful too.
So you touched on this, but I can hear people saying, but what about Apple? But what about Amazon? I wish that I had invested in the IPOs for those companies. Yeah. How do you know you're not missing out on a potential jackpot?
This is the hard part, right? Like if I knew, then I probably would have invested in it and wouldn't have to be a reporter for the rest of my life, Like we could retire early and do whatever we want. Nobody knows what's the crystal ball is of investing. And I'm sure that there will be examples in history where, like Amazon, like Apple, if you had bought in at the IPO, you would be very happy. But I think the Meta example is a good one because they struggled so much 12 months after IPOing. Even if you bought in at that trough a year after Meta IPO'd, you would still be up thousands and thousands of percentage points since then to where we're at today with Meta stock. So even following that advice of just waiting a year, you would still be very much so netting out ahead, which is also important because you don't want to be getting in and out of these stocks because of the capital gains taxes you would have to pay too. I had friends talking about how they were so proud that they bought into SpaceX and sold after it was up 20%.
Oh.
And I don't think they're aware of the tax implications of that decision, right? So just
then you're like losing out on that 20% more or less, right?
Exactly. We still netted out behind in that dynamic. Exactly.
Yeah. Interesting. Yeah, investing needs to be a long game.
Yes.
So despite the fact that experts are saying don't invest in these mega cap IPOs, we saw record retail interest in the SpaceX IPO. Yeah. Why do you think some people were so eager to invest?
Yeah, I think that this AI moment feels so scary and yet so full of hope. I feel like there's so much fear right now about whether or not AI is going to disrupt the economy and people's jobs. And then at the same time, you're looking at this concentration of wealth in the hands of just a few AI companies, their employees, and their executives. And this was kind of the first big shot for everyday people to get a chance at getting in on that. And so I feel like there was just so much tied into it that kind of collided at once to make this such a record-breaking IPO. And there's the Elon Musk effect of it all, and his company Tesla, of course, completely divorced of corporate fundamentals, has continued to really outperform. So there's that example for people to look to, and the general hype around AI. I feel like that created such a unique moment for this stock to really have a banner day one on the stock market, as we saw.
So this could change by the time this episode could come out, obviously, but SpaceX's stock is now trading below its IPO price. Does this mean that those investors made a bad bet on IPO day?
Not necessarily, because of course that could change. And if we do compare it to Tesla, it's an incredibly volatile stock. And yet people who got in on that IPO are very much netting out ahead. And that's why, for especially the everyday investor, there are obviously day traders who have a completely different approach. But for the everyday investor, as you said, you're really wanting to buy and hold these names. And so if you are going to be investing in individual stocks instead of index funds that track baskets of stocks, you want to be picking companies that you are comfortable sitting in for years and years to come, so that volatility doesn't matter, so that a down day doesn't make you do something rash and sell out of a stock.
This point that you mentioned about the opportunity for everyday investors here is something that I've been thinking about too, because on one hand, it's like, it's good that these companies are IPOing because it does give everyday investors the opportunity to get in on them. It's not restricted to the small group of already wealthy people. Yeah. And yet the advice is for everyday people, wait. How do you think about that contradiction?
I think that's such a great point and really well said. There is absolutely that sort of dissonance between this idea of democratizing access to finance and getting the retail investor who has continued to surprise Wall Street and done really, really well, especially in the last couple of years. And yet this idea that the institutional investors still get to have the upper hand ultimately. And that, I think, is the kind of disconnect that's been challenging to explain to the retail audience that has continued to get better and better at their investing and has outsmarted Wall Street time and time again these last few years. But with IPOs, Wall Street still has that leg up because of the fact that they get to get in much earlier than the average retail investor does. And because of that, they're getting a more favorable price and they don't have to stomach the same volatility that the retail investor does. And especially with these IPOs, these investors who are in these companies, they've been in them for so long. There's been a really long delay in these companies going public. And so a lot of these private investors have said, I can't wait for SpaceX to go public so that I can sell and get out. And then the retail investors who get in late are the ones who are hurt by that. So that's all of those dynamics are kind of coming into play.
When we come back, even if you don't buy shares in these AI companies on day one, you could still get a slice of the pie when they start showing up in retirement funds. Could that benefit your portfolio, or is it risky? That's after the break. So whether or not you buy the individual shares here, you could still potentially own a fraction of these companies because eventually we'll start to see these companies' shares showing up in ETFs or index funds or people's retirement accounts. Is that a good thing because it lets people get a slice of these companies, or is it potentially risky because of the volatility that you're talking about?
The experts I've spoken to have said a bit of both, that it's a risk and an opportunity. On the one hand, by not including the likes of SpaceX in these index funds, when SpaceX is performing really well, then investors might say, hey, why is this not in my index fund? You know, it's the 5th largest company in the US. It should be part of my basket of stocks that I'm invested in. But because we don't have that clarity yet of the average, performance of this company and the fundamentals of it, it's difficult to kind of put it into the same basket of stocks that have been vetted by the S&P indexing committee that typically waits an entire year before adding a company to any S&P 500 index fund and has a very rigorous process for deciding which companies get added in. There are so many household name companies now that had to wait years and years before they were added into the S&P 500. I keep bringing up Robinhood, but they quarter after quarter kept thinking they were going to get added, kept hoping, and it took years for them to get added to the S&P 500. And that was after they had, had a massive soar up in their own stock price. So it's not just about the company performance. That's not the only thing that determines whether you get added to the index.
We've heard a lot about the risks of an AI bubble. We did an episode a few months ago where I had investment strategist Ross Mayfield on, and he said things aren't looking so bubbly yet compared to previous bubbles that we've seen. But obviously, the industry is moving fast and changing quickly. What are you seeing now? And what is the risk of an AI bubble burst or even just a market correction? How could that impact the performance of these stocks?
The AI bubble is looking very bubbly this week. I filed a story this morning and the headline was the AI bubble gets even more bubbly because we've seen so many examples in just the past couple of weeks where any one of these news events could have been an example of the AI bubble getting closer and closer, and this is all happening at once. SpaceX, just after going public, issuing debt, that is unprecedented. Google issued $80 billion worth of equity. These are massive companies that are getting a ton of money from investors that are saying we actually want even more money, so we're turning to debt and to the bond market for more cash. More than half of the data center spend right now is being financed by credit, not by cash. And to your point on kind of the impact of the bubble, that's the thing that I worry about and monitor the most is that, there are so many different parts of the economy and the stock market that are tied to this AI debt now. And that's the thing that I'm constantly kind of trying to monitor, because it's not just siloed off to tech stocks now. It's so embedded across the market and the economy.
Right. Yeah. It's like on one hand, it's sort of regardless of where you're invested, if the bubble bursts, you might feel it. But perhaps another reason why it's worth waiting for some of these IPOs to get a better sense of the performance.
Exactly.
If somebody came into this episode really thinking, I believe in AI technology, I want to try to invest in OpenAI or Anthropic, obviously you and I are reporters, this is not formal financial advice, but what do you think they should consider or be thinking about?
I think if you feel like these are winning companies that are going to stand the test of time, then you'll be able to wait a year and look at their earnings reports, join their earnings calls, and you'll hopefully feel that way a year from now. And in the meantime, you can follow the general financial advice of dollar cost averaging into the S&P 500. And if those stocks have been added to index funds over the next year, you'll get that exposure through that. You're also getting exposure to these stocks through the S&P 500. So many of the hyperscalers, the Amazons, the Metas, the Microsofts are tied to OpenAI and Anthropic. So you're getting exposure. You're just not a direct shareholder in those companies. So,
And explain dollar cost averaging, just so that if people aren't familiar.
Yeah. So that's the idea that you don't think about where the stock market is. You just every single month put a certain amount of money into the stock market. So say $100 a month into an S&P 500 index fund, and you just auto invest and don't think about it. And that is the sort of broad financial advice to do that.
Madison, thank you so much for doing this. I appreciate it.
Thank you for having me.
Thanks again to Madison Mills. We'll link to her Axios newsletter AI Plus in our show notes. When it comes to investing in these giant AI companies as they IPO, Madison says experts recommend waiting to see how they do in their first year. But trying to guess which individual stocks are going to be winners is always risky. The tried and true investing advice is to put a set amount of money each month into an ETF or index fund that includes a broad basket of stocks, like the S&P 500, to benefit from growth across more of the market. But whether you choose to invest or not, it is going to be very interesting to learn more about the financial performance of these very important companies as they go public, and to watch how being beholden to public shareholders might change their business priorities and decisions. That's it for this week's episode of Terms of Service. I'm Claire Duffy. Talk to you next week.